Hello students, welcome to Mr. TK classes. Today we are doing FSC 1502 milk examination. So we move on to question 1. Alright, which one of the following transaction will result in a change in the equity of an entity operating on a bank overdraft? Alright, so our whole question is here. We want something that will result in a change in the equity. So this is easy. We go to question 1, calculations. So what can result in a change in the equity of a business? What will result in a change? 1 is income, 2 is expenses, 3 is capital additions or capital injection, capital additions, 3 is drawing. So let's look for these things here. All right, let me also put signs. This one increases equity, this one decreases equity, this one increases equity, this one decreases equity. All right, so the option A, a direct deposit of the salary of an employee into his or her bank account. All right, a direct deposit of the salary, it means that this one is an expense. So an expense, yeah, right, it is going to decrease the owner's equity. So our answer here is A, but let us just check the other options. Receive money from a debtor in a payment of his or her account. This is a debtor paying. So the account affected here is bank and debtor's control. So this is wrong. C, a direct deposit in the bank account of an entity by a creditor. So creditors control in the bank account, it means it's out. A check issued for payment of assets purchased for cash. So what is it here? We have both the assets account, because there is going to be bank account and the asset that was bought. All right, property bought on credit. This is all right, so this is an asset and the liability, so this one is out. So our answer here is A. We move on to question 2. So question 2, what does question 2 say? Question 2, it says, which one of the following statements is correct? A posting to the debit side of a ledger account will, where applicable, always have the effect of. All right, so for us to able to interpret this question, we need to know the accounts and their balances. So we are going to start with assets. Assets have a debit balance. It means that they increase on the debit side and decrease on the credit side. So the next one, let's say expenses increase on the debit side, right, and decrease on the credit side. Okay, so the next one is drawings. So drawings increase on the debit side and decrease on the credit side. So next one is income. This one, we just have to know that it has a credit balance, so it increase on the credit side and decrease on the debit side. Then the next one is liabilities. All right, and here credit balance increase on the credit side and decrease on the debit side. Okay, then capital credit balance right? Decrease on the debit side. All right, now let's look at our question using this. I'm not gonna explain why this increase on the debit side and decrease on the credit side, because if you look for the accounting equation, my lecture on the accounting equation, you are going to see the explanation of all this. So now we move. All right, a decrease in the balance of an asset account, a decrease in the balance of an asset account. All right, let's go back to the question. A posting to the debit side. All right, so we are just looking at the debit side of each and every account here. All right, of a ledger account will, where applicable, always have the effect of. So we are looking at the debit side, right? A decrease in the balance of an asset account. If we post to the debit side, does it result in a decrease? No, this is wrong. A decrease in the amount of a nominal account. Which nominal account is this one? Let's leave it. All right, let's go to C. A decrease in the amount of an income account. All right, let's go to the income. If we post on the debit side, does it result in a decrease? Yes, it results in a decrease. So now we are going to say our answer is C. Let us also look at the other one. Question 3. Right. Okay, let us also look at other options. A decrease in the amount of an expense account. Let us look at the expense. If we post to the debit, it results in an increase, not in a decrease. Wrong. Okay. An increase in the balance of a liability account. If we post to the debit side, it doesn't result in an increase. No. So our answer there is C. So now we move to question 3. We move to question 3. Which one of the following statements is correct? Which one of the following statements is correct? All right, so question 3. All right, question 3 here looks like a bank reconciliation question. Errors made by the bank are corrected in the cash journals. So this is a bank reconciliation question. So what I have to do here, I just have to summarize the bank statement, the bank reconciliation for you. All right, let's summarize. We are going to say the first thing that we can have. Let me just say errors and omissions. Errors and omissions made. Errors and omissions made by the bank. These errors will be also reflected where? On the bank statement. So let's just say or bank statement. Let's just say or a bank statement to make the long story short. All right. So this one, if this happens, what we have to do here? Let me come here and indent a little bit. Here we have to record or we have to record or correct. We have to record or correct. Or let me just say this has to be reflected. This will be reflected. This will be reflected on the bank reconciliation statement. On the bank reconciliation statement. This will be reflected on the bank reconciliation statement. All right. So the next thing that we have to write here is that errors and omissions made by the entity. Right here, let me just say or CR cash journals. Let me just make a long story short here, or cash journals. I'm not gonna write many things. I'm just gonna say or cash journals. Let me just say or bank account. Bank account. I'm just summarizing these statements. Or bank account, right? What else can I write? CRJ and CPJ, right? CRJ and CPJ. If this happens, all right, it means that these things update these particular journals. Okay, so now let us look at our question with this information that is here. We are going to say which one of the following statements is correct. Errors made by the bank are corrected in the cash journals. Errors made by the bank are not corrected in the cash journals, right? Okay, here let me just write cash journals. Update these particular cash journals. When I say these particular cash journals, we are just looking at everything that I've written here. So errors made by the bank are corrected in the cash journals. No. Errors made by the bank, they will be reflected on the bank reconciliation statement. So A is wrong. B, a deposit made directly to the bank that appears on the bank statement should be included as a reconciling item in the bank reconciliation statement. Right? A deposit made directly in the bank that appears on the bank statement. Where does this one appear? It appears on the bank statement, right? So what are they saying? They are saying it doesn't appear here in the cash journal. So the cash journals have to be updated, right? A deposit made directly to the bank that appears on the bank statement should be included as a reconciling item in the bank reconciliation statement. This is wrong. This thing is appearing on the bank statement, right? So we cannot show it again as a reconciling item on the bank reconciliation statement. No, right? This will be yes, we cannot show it here. It should come here to the updated cash book. So this is wrong. B is wrong. All right. C, errors made by the end should appear as a reconciling items on the. This error is made by the entity, so it cannot appear. All right. It cannot appear as a reconciling item on the bank reconciliation statement. No, because it has to come here to the updated cash journal. All right. So move on to D. A credit balance in the bank statement and a debit balance in the entity's bank account in the ledger show a favorable. So there's something I need to write again here. There's something I need to write here. I guess I need a different bullet for this. All right, for now let me just use this bullet and say, and let me just use this bullet and say bank statement. Okay, let me start with the bank account or cash journals, right? Cash journals or okay, CPJ. Let me say CRJ. This is the debit side, right? Okay. This is the debit side of the bank account. Let me say debit side plus, yeah, or let me say and CPJ. This one now is the credit side. So let me do this, right? Okay, let me do this. Then I say bank statement. So the bank statement here increases on the credit side and decreases on the debit side. Let me start with debit, right? Decrease on the debit side and increases on the credit side. All right. So what does this one say? A credit balance in the bank statement. A credit balance in the bank statement, right? Okay. and a debit balance in the entity's bank account, and a debit balance in the entity's bank account, right? Show a favorable bank balance. Yes, we can see that debit here in the entity's bank account is plus, and credit here in the bank statement is plus. So it means that it shows a favorable bank balance. So our answer there on number 3 is D. Our answer there on number 3 is D. Okay. Question 4. Question 4. All right, let us just look at E. E is just saying A and E, so that's wrong. All right, we move on to question 4. We move on to question 4. All right, so question 4, we are going to say a comparison of the May 2019 bank reconciliation statement and the June 2019 cash journals with the June 2019 bank statement of June traders reviewed the following. So it means we are going to use this information again. Let us see if we are gonna write in calculation on 4 here. All right, so we are going to say, which one of the following alternatives represents the final balance of the bank account on 30 June 2019? Which one of the following alternatives represents the final balance of the bank account? All right, or where is the balance of the bank account on 30 June 2019? All right, is right, balances as at 30 June 2019, bank account. Okay, provisional, before the above transaction were taken into account. So this 117 is provisional, right? Is provisional before these were taken into account. These ones, they're just showing you what was there at the beginning of June. Because if this was at the end of May, it means that this was at the beginning of June. All right, so what are we correcting here? The bank account, right? We are correcting the bank account, which is this. That's what we are correcting. So we are looking at this: errors and omissions made by the entity, or errors and omissions in the cash journal, or errors and omissions in the bank account, or errors and omissions in the CRJ and CPJ. All right, so that's what we are looking for. We are using this second statement on 3. So we are going to say bank charges of 63 rands have not yet been taken into account. So what does this mean? If we have bank charges, they will be reflected on the bank statement, but they won't be reflected on the cash journal. Why am I saying that? Because they are saying they have not yet been taken into account. The business sees that, oh, the bank charges were 63. They'll see that on the bank statement. So this was on the bank statement, but it was not in the cash journal. And this is a charge. The business was being charged. So this is a payment. All right, so let's move to B. A check of 316 for telephone expenses was recorded in the cash payment journals as 361. All right, so in the cash payment journal, there is something that was wrong. In the cash payment journal, there is something that was wrong. All right, what was wrong? It was a check. What happened? A check of 316 was recorded as 361. So a check was overstated, right? So a check was overstated. We are going to say 361 was recorded instead of 316. So the amount that was recorded is bigger than the amount that should have been recorded. What does this mean? It means that the amount that was subtracted, since this is a CPJ, the amount that was subtracted is bigger than the amount that should have been subtracted. So what are we going to do? Let's add back this 45. It was not supposed to be subtracted. 45 was not supposed to be subtracted because the amount that was subtracted was bigger than the amount that should have been subtracted. Oh, we still have C to E. Let's look at C to E. A deposit of 490 did not appear on the bank statement. It did not appear on the bank statement, so it should come here. It should be reflected on the bank reconciliation statement. It doesn't come if we don't correct the bank account balance. The bank erroneously debited. Who did that? The bank, right? It's an error made by the bank. The bank erroneously debited the entity's bank account with interest of 340. This is an error made by the bank, so it doesn't come here. to our cash journals. All right. Checks to the amount of 1,210 were still outstanding. They were outstanding, yeah. So we should show them as a reconciling item in the bank reconciliation statement because they were outstanding there on the bank statement. We didn't see them. All right. So everything now is sorted. Let us just say 117 subtract 63 plus 45. What we get? 99. And 99 is favorable because 99 is positive. So 99 is favorable. Let us go to our answers. 99 favorable, option C. 99 favorable, option C. We move on to question 5. We move on to question 5. All right. So question 5. Question 5. Question 5. What does question 5 say? The following information was taken from the books of Rosa's Flower Shop as the 20th February 2020 before any adjustment or closing entries have been made. All right. Let's quickly run to the requirement. Which one of the following amounts represent the net amount in respect of trade receivables to be disclosed in the statement of financial position of Rosa's Flower Shop as the 20th February 2020? So here you have two options. You can do it as a ledger account, but here it's not necessary because these things that we have here, they are few. We can just do the calculations. We don't do it as a ledger account. So what is it that we need to correct? The net amount in respect of trade receivables. Where is that amount? Trade receivables control 31,270. 31,270. 31,270. So what are we looking for again? All right, we need to correct this 31,270. So everything that is here, it means it was catered for already. Let's go to the adjustment. A further amount of 170 must be written off. So this, what we are correcting is trade receivables. So if an amount is going to be written off, we are saying we are no longer expecting to receive 170. Let's remove it from our trade receivable. This is credit losses. All right. On 20th February 2020, the allowance for credit losses account should amount to what? 1,555. So and this allowance for credit losses, we are doubting these people that they might not pay us. So let's be prudent and subtract these these people that are owing us. So these people are owing us 1,555. Let's subtract it from our trade receivables control and see what our amount that we are going to have. So the other one is the requirement, it's not an adjustment. So there's something that I want you to know here, right? You have to take a special attention to this. Sometimes they write by all right, they'll just say, let me see, the allowance for credit losses account should amount to, all right, they will just say it will increase by. It means that now it is different because you will be having a allowance for credit losses here, right? Let me say, for instance, this one, for it to increase from 1,405 to 1,555, it means that it increased by 1/5. So in some instances they will write it in it must be adjusted by 150. Then you know that this is the amount. So what you subtract here is the amount that it has been adjusted to, which is 1,555. All right. Without wasting much of our time, let us say 31,270 subtract 170 subtract 1,555. What do we get then? If we do that, we get 21 29,545. 29,545. Do we have something of that nature in them? All right. 29,510. 29,545. 29,545. All right, I can see that's option C. I can see that's option C. All right, so option C. Option C. We are gonna come here, option C. All right, and which question is this? It's question 5. I'm seeing, oh yeah, question 5. Okay, option C. Option C, question 5. All right, then we move on to question 6. We move on to question 6. We move on to question 6. So here, question 6. We move on to question 6. So, all right, let us also come here and write question 6. Question 6. We move on to question 6. All right, question 6. Flotana uses control accounts. Which of the following alternatives will cause the trial balance not to balance? All right, so question 6. Let us just write a few notes on question 6. Let us just write a few notes. Let us just write a few notes. Let us just write a few notes here. Let us just write a few notes. So question 6. All right, question 6. Errors that will affect the trial balance. Errors that will affect. Okay, errors that will cause the trial balance not to balance. Errors that cause the trial balance not to balance. All right, what are they? What are they? Posting one amount on the same side of the posting one amount on the same side of two ledger accounts. Ken, what is another one? Completing double entry with different amounts. Ken, let us see if these two statements are gonna answer our question. The bank overdraft appears as a credit balance in the trial balance. Okay, yes, that this does not affect the trial balance. Why? Because this is actually a correct entry. A bank overdraft is appearing as a credit balance. Yes, if we have a bank overdraft, it means that we have a negative balance in the bank account. So when you have a negative balance, it should appear on the credit side. All right, so B, a credit sales invoice of 1,090 was incorrectly entered as 190 in the sales journal, right, and posted as such to the personal account of the debtor. Okay, this looks like completing double entry with the same amount. This one, yes. So the amount was wrong, yes, right, but this amount is the amount that was used to do all the entries. So it is opposing this point, right? So this is out. So now we look at C. A credit purchase invoice was correctly entered as 325 in the purchases journal, but the amount was incorrectly posted as 235 to the personal account of the creditor. All right, this was correctly entered as 325 in the purchases journal. Okay, so this amount that we entered in the purchases journal is the amount that we still take to the ledger accounts. So what does this mean? It means that this will not affect the trial balance, because this is what we take to the ledger account, so it doesn't affect the trial balance. All right, let's look at D. A credit loss was debited to the trade receivables control account and the credit loss account. So what happened here? Okay, it is this posting one amount on the same side of two ledger accounts. You see, all these accounts, these two accounts, we posted this amount on the debit side of these accounts. So we posted on the same side of two ledger accounts. So obviously we are going to overstate the debit side, because for every entry we should have a debit entry and a credit entry. It didn't happen here. So D is the answer. This the side Flotana uses control accounts. Which of the following alternatives will cause the trial balance not to balance? D will cause the trial balance not to balance, right? So our answer for question 6 is D. Let us just look at E. The trade payables control account was incorrectly credited with the purchases returns, and the purchase returns account was incorrectly debited. So you see, there was a debit entry and a credit entry here. So the trial balance will balance, even if yes, the trial balance will balance. All right. So now, let us move to question 7. What will be the entity's markup as what will the entity's markup as a percentage of cost be if the entity buys goods to the value of 4,500 and resells them for 6,900? Ignore VAT. All right, so what we are going to do under question 7, I'm just gonna write one statement which is gonna guide us under question 7. One statement. So what is that statement that I'm going to write? I'm just gonna write that markup is gross profit percentage on cost of sales. It's gross profit percentage on cost of sales. So so what we are going to do in this question, what is our gross profit? What is our gross profit in this question? Our gross profit is because here we are reselling this for 6,900, right? Subtract the cost, which is 4,500. So we are going to get 2,400. So we are going to say 2,400 divided by, remember I said markup is gross profit percentage on cost of sales. So our cost of sales is 4,500. 4,500. Then we multiply by 100, right, to get a percentage. So we are going to say divided by 4,500 multiplied by 100, right? So we are going to get 53.33. 53.33%, which is option E for number 7, which is option E for number 7, which is option E for number 7. All right, so question 8. So question 8, we are going to say the following information pertains to wooden house traders. The following information pertains to wooden house traders. This is the information. The amount for revenue in the statement of profit or loss and other comprehensive income of wooden house traders for the year ended 20 February 2020 will be. All right, so let us go and do the calculations for question 8. Let us go and do the calculations for question 8. So we are going to say revenue. We are going to calculate revenue. So in our calculation of revenue, we are going to say sales. This is how we calculate revenue. Say sales, right? We are going to put the amount here. Let me just represent that with the X, with an X there. Then sales returns. Sales returns. Sales returns. Sales returns. So sales returns, we are going to subtract them, right? Let me just put an X that is in a bracket. We are going to subtract this. Then now we move on to settlement. Okay. Settlement discount, settlement discount granted. Okay. So here, how do we know that we are going to put settlement discount granted or received? We know because we are going to say if we sell, we'll give our customers discount. So the settlement discount granted. Settlement discount received will be if the one that we get if we buy. That's when we receive a discount. So here is settlement discount granted. Settlement discount granted. All right. So our sales amount now. Let's deal with the amounts. Let's go back to our question and deal with the amount. All right. Sales 1,087,500. 1,087,500. Okay. Then now, do we have sales returns? Yes, I can see them. Sales returns 17,500. 17,500. Okay, do we have settlement discount granted? Yes, 3,000. 3,000. So we have 3,000. Okay. Then now, all right, let us not forget our brackets here. Let us not forget our brackets here. Let us not forget our brackets here. All right. Okay. So now we are just gonna subtract this. We are going to say 1,087,500 subtract 17,500 subtract 3,000. 1,067,000. 1,067,000. 1,067,000. Okay. 1,067,000. 1,067,000. All right. So this is our answer. That's what we are gonna look for. 1,067,000. Our answer is B. Our answer is B for question 8. Our answer is B for question 8. Then now we move on to question 9. We move on to question 9. We move on to question 9. All right, question 9, we are going to say the following information pertains to wooden house traders. All right, I think it's the very same information. The cost of sales in the statement of profit and loss and other comprehensive income of wooden house traders for the end of February 2020 will be. All right, so now we are calculating the cost of sales. We are calculating the cost of sales. We are calculating the cost of sales. So we are going to say cost of sales. Now this is question 9. Cost of sales. All right. We need a little bit of spacing here. Cost of sales for question 9. How do we calculate cost of sales? We say opening inventory. Opening inventory. Right. We add purchases. We add purchases. Right. We subtract. Okay, let's add delivery expenses. Delivery expenses. Right. All right, then we'll get a total here. What are we gonna do with that total? All right, let me just say this should be like this. All right, this also should be like this. All right, then we are going to subtract closing inventory. Closing inventory. Closing inventory. Okay, when you subtract closing inventory now, and we are going to have cost of sales. 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 This will be our cost of sales. All right. Okay. But these purchases also need to be calculated. These purchases also need to be calculated. Let us also calculate our purchases here. Let us also calculate our purchases here. Purchases, how do we calculate them? All right, without wasting much of our time, let us just check if we have anything that will make us calculate our purchases. All right, or what we'll do, just put everything in brackets here so that we won't have many calculations. All right, opening inventory. All right, when is our year ending? All right, 20th February 2020. So it means starting 1 March 2019, right? Okay, opening inventory. Inventory wood 1 March 2019, 112,500. So let's come here, 112,500. Then purchases. Purchases, do we have? All right, purchases wood. Yeah, 727,500. 727,500. Do you have delivery expenses? Do we have delivery expenses? Okay, no. Interest, inventory, all right, okay. No, we don't have delivery expenses. We don't have delivery expenses. Okay, I just have to do this. We don't have delivery expenses. So let's add these two. Let's add these two. 112,500 plus 727,500. 840,000. 840,000. Then closing inventory. Closing the inventory count revealed that 20 sheets of wood valued at 4,500 each were on hand on 20th February 2020. All right, so we are going to say how many sheets of wood? 28 sheets. 28 sheets of wood valued at what? 4,500 each. Okay, so this is 126,000. This is 126,000. This is 126,000. All right. So what is our cost of sales? What is our cost of sales? 112,500 plus 727,500. 84,000. Oh, this was already there. All right. Subtract 126,000. 714,000. 714,000. Right? 714,000. Okay. So 714,000 is our answer. So this one, let us remove it because we didn't see anything that will adjust our purchases there. We didn't see purchases returns. We didn't see drawings of stock. We didn't see settlement discount received. So okay, it's fine like this. 714,000. That's option E. That's option E for number 9. That's option E for number 9. So now we move on to number 10, which is going to be our last one for this session. Then we'll continue when we do next session. All right, so number 10, still the same information. Let us see. The amount for credit losses in the statement of profit and loss and other comprehensive income of food and house traders for the year ended 20th February 2020 will be. So what we want here on question 10 is credit losses. Credit losses. Question 10, we are going to calculate credit losses. That's what we are going to calculate in question 10. All right, so credit losses. Let us come here and see what is in our question. Let us come here and see what is in our question. Do we have any credit losses in the trial balance? Do we have any credit losses in the trial balance? All right, let us go down. During the year, a debtor owing the business 7,500 was declared insolvent, and this account was not written off immediately. Later, during the current financial year, 3,000 was received from the administrator of the debtor's insolvent estate. It was decided to write off the balance of the debt as irrecoverable. All right. So initially, the person was owing how much? Initially, the person was owing 7,500. Then we received 3,000. Then the balance 4,500. We are going to write this off, right? 4,500 is going to be written off as irrecoverable, so it's going to be a credit loss. Then this transaction must still be recorded in the accounting records of food and house traders. All right. D, it was decided that an allowance for credit losses to the amount of 1,050 need to be created. All right, so we are 1,050 needs to be created. All right, so in some instances you see allowance for credit losses here, and you will see the amount that it will be adjusted to. This one in this question we don't have here. Why? Because it is year of creation. This is when it was created. That's why we don't have anything at the beginning. We just have this. So we are going to add this. And when we add this, we are going to get 4,500 plus 1,050. We are going to get 5,550. 5,550. 5,550. I'm going to explain something after I just pick this answer from the options. Option A. Question 10 is option A. Question 10 is option A. All right. So there's something that I still need to explain here. I just need to write. Let me just write one or two things under question 10 here. Let me just write. All right. So if you see an amount in the list of balances or in the trial balance and another amount in the adjustment, right? If there's an increase, right, you have to add. If there is a decrease, you have to subtract. Why do we add an increase? An increase means that that amount is the credit loss for that particular financial year, right? Because what we will be having in the list of balances will be the one at the beginning, and they will tell you that it has been adjusted to, they'll give you the one at the end. So the difference is what happened during the year, which means the increase is the credit loss for the year. You have to add, right? Then if there's a decrease, you have to subtract, because our credit losses have decreased, so we have to subtract. So this what I've written here is, you just have to know that this is about allowance for credit losses. Allowance for credit losses. This is about allowance for credit losses. So you'll be adjusting your credit losses using the allowance. This is what you do. All right, thank you. We are done with this session. We'll do number 11 to 20 in the next session. Thank you.